After a really solid start to the month, gold prices have been selling off sharply recently. What is the reason for this, and what is the outlook for this precious metal for May? Welcome to our market analysis videos here at Zenfodex. For those who are new to the channel, my name is Conan. I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. And in today's video, I'll give an in-depth analysis of the gold market by looking at the fundamental outlook first of all, then I'll move on to the chart and mark the key levels to watch out for in the month ahead. Enjoy. Okay, so bearing in mind this month is likely to end down for gold, most likely unless we have a dramatic turnaround in the next few days, let's take a look at the bear factors that are likely to be in play for May. Now, first of all, the US dollar has been on a crazy run this month. As it stands, the DAXI, which is the dollar index, is looking to consolidate at its highest level since the pandemic and its best week since 2015. And this is because this whole expectation of a 50 basis point interest rate hike consistently in the next few meetings by the Federal Reserve to slow down this rampant inflation. Now, if the Federal Reserve remains hawkish throughout May, the dollar should stay strong and this will limit gold prices. However, there is this argument floating around at the moment that potentially maximum hawkishness is priced in or is nearly priced in. So look for a sharp reaction down on the DAXI in May to help lift gold prices potentially. We analyse the dollar every single day in our Discord channel for free. So feel free to join. The link is in the bio and in the description of this video as well. Okay, so moving on. Over in China, there are actually COVID-19 lockdowns in play, which is just really hard to imagine, right? Beijing, for example, has ordered mandatory testing and has not ruled out more measures coming in. As China have actually now got this zero COVID policy, quite a strict policy as well. Traders are understandably concerned over the slowdown in Chinese economic growth, and it's pouring into markets globally. Gold is one of the biggest sufferers of this, and it was at the beginning of the week as well. And this is because COVID-19 led lockdowns are placing direct pressure on gold demand prospects in what is a huge player in China. Now, if this worsens during May, gold could keep falling, and I've noticed how sharp it fell from this news. So I think this is going to be quite an important factor going into May, so make sure you keep an eye on this one. And finally, let's take a look at this war in Ukraine and the subsequent effect on the volatility index and gold prices. The way I see it is when the invasion started, we saw volatility picking up and we saw gold prices going up. This is the key chain of events for me that caused a sharp rise in gold prices since the war began, i.e. when the invasion started. And that's because gold thrives off this volatility and it thrives off a rise in volatility. Now, the war in Ukraine does go on, and it's extremely sad to read the bombings that are going on every single day in various cities and places in Ukraine. From a market's point of view, I'm just wondering whether this has all started to be priced in now. Unless there is an escalation, which people are unaware of at the moment, such as maybe nuclear weapon usage or a ramp up in the military operation, in the scale of the military operation, I find it hard to believe that the markets are going to be surprised by what comes out of Ukraine next month. This is likely to really slow down that chain that I've mentioned at the top of this slide and potentially limit gold prices for May as well. Now, when I conclude all of this, for gold to really rise, I think one of the main things that needs to happen is we need to see this slowdown in the US dollar after its rampant month. And escalations in volatility and potentially escalations in the war need to occur, which is what we don't want from that side. If the factors were to generally stay as I've explained them now, then I think gold is likely to end the month down in May, to be honest. Either way, let's listen to what the technicals are telling us and mark the key levels to watch out for during next month. Okay then, so here is what I see for gold from a technical analysis standpoint for the month coming up. And I'm going to mark some key levels for you, but if you watched my short video earlier, one of my main plays that I have at the moment is I'm looking at market inefficiencies, market gaps, because I love the way they act as magnets for prices. And the next gap that I see in this market is down, you can see here around this 1845 level, and I've circled it for you. You can actually see, if I zoom right in on that, you can actually see the price inefficiency we have here, and I've circled that for you. That's really my true support level for May. Now, for us to fall down into that level, and let me just mark that level actually as a potential selling target for May. Take profit level. Now, for us to get to that level, what I want to see first of all is I want to see the market close below these two structures here. This one and this one. If we were to get close below this structure, that's when I see the market really falling down into our true market gap and our selling target really for the month of May. Now, for the bulls, this is actually quite a nice sign, because what we've had here is we've had a real flush out of liquidity of 1, 2, 3 lows just from this candle that we're actually trading in today. So it's actually quite an important day really for me for the outlook of gold. If we get a close below this candle, then what I'd like to see is a retest of potentially an order block level, potentially snapping back up to maybe towards around this 1900 level before we get our move down to our 1840, which is going to be my main play for May. If the market was to snap and actually close, let's say it closes at around where the market opened, around here, then what I could see the market doing is actually maybe testing this low once more, and then we can maybe get a move up to the next sort of what I like to call a buy to sell candle. And really where I see gold going maximum for May is around this 1950 level. So again, that's our take profit. So we have two situations here. We want the market to close below this liquidity that we have all sitting below here. If we get a close below there, we may start to see some support at this sell to buy candle, but I see it mainly as low resistance, and I think we're going to go and target this market gap we have in here. If we can get a close, maybe even this week or today, within this liquidity and within this range, then I do think we're sort of in this ranging market where we're going between potentially this high and the lows that I've marked here. So we may just see a bit of sort of this price action for a bit until we see things that are more clear. They're my main plays for gold for this month, and I've kept it hopefully nice and simple when I look at the moving averages. So that's it for my gold video today. I hope you've all enjoyed this video. Just to quickly recap, 1840 as the main selling targets for May, 1950 if we can get a snap back within this range, and then potentially may go looking towards 2000 if we were to see escalations in the war in Ukraine and a significant sell-off in the dollar as well. If you've enjoyed this video, make sure you like and subscribe to the channel. On week 4 of the month, there'll be 3 monthly forecasts going out: gold, silver and oil. And on week 1 of the month, there's another 3 going out for that month, and that's going to be on natural gas, platinum and copper. If there's any more you'd like me to do, then please feel free to drop the comments in on the comments section, but there will be shorts going out every single day as well on the most recent trending markets. Hope everyone has a great trading day anyway, and I'll catch you all for the next forecast video, which will be tomorrow. Cheers.